It is time to check in with Amanda Lang, host of Taking Stock, which airs, of course, Friday night, 6 o'clock here on BNN Bloomberg and, of course, across the iHeart Radio network. And Amanda, this week, inflation numbers coming in at 4%. And I know we're supposed to look at this overall and say, well, you know, if it wasn't for the price of gas, maybe it wouldn't be so bad. So what in the numbers that you're looking at or that you've looked at kind of stick out to you?
Yeah, I mean, the real problem for all of us is the same as the problem for the central bank, which is that the core numbers are still too high. So that's that kind of stickiness. And we might agree that stripping out, as they like to do over time, food and energy is kind of, it's a bit nonsensical in some ways because, of course, although they're volatile, which is why the economists like to strip them out, those are two very non-discretionary things for a lot of people. So, and the thing about gasoline being high is that is a cost to not just us as consumers, but of course, a lot of the things we consume, the price of them will go up when gasoline costs are high. So transportation alone, getting the stuff to the grocery store costs more. So that's, we know from the bank's internal kind of thinking around this, their last meeting, they're watching that, the core numbers very closely. They're watching our consumption very closely. And they're both, although they're on hold right now, they're uncomfortably high.
And where are we at with employment numbers these days?
So we are still pretty full employment, although it's interesting because the labor market still feels tight in terms of the job openings. And the unemployment rate, even if we see it tick up a little bit, it's still at levels that we would consider pretty solid. We've seen the big thing that the bank's watching is wage increases continue, right? 4 to 5% wage growth is pretty material as you bake that in for the next year. There was a bit of catch-up happening, as we know. Wages didn't keep up with inflation, especially when inflation took off and kind of surprised everybody coming out of that pandemic. But we are now caught up, and the bank is kind of cautious around will wage increases slow down. They need to start slowing down because if they run ahead of inflation, that becomes an inflationary spiral, right? It kind of prices in higher costs for business for a whole other year.
You know, so sometimes, of course, we think we live in a bit of a vacuum here. We look at what's happening in Canada. So U.S. comes out, does not hike rates. They're dealing with the same situations we are. But in the meantime, their dollar has been on a tear. It continues to rise. I think it's been 6 months in a row. What does that mean for us here?
So we often feel the effects of what's happening to the price of oil. And so we've kind of been bouncing around thanks to that. And we measure ourselves against them. So the strength of their dollar for sure means we're going to seem weak. And indeed, we do seem weak. It's not a bad thing, of course, when you're an export-focused economy to have a weaker currency. It can actually play very well in terms of our goods looking like they're on sale to overseas buyers. The problem is, of course, for businesses that need to make purchases in U.S. dollars, and that's every commodity in the world, we do have to buy them with our Canadian dollar. So it's an uneasy trade-off. I will say when the U.S. Central Bank made their decision to hold steady this week, it was a very similar kind of tone as our own, which is we might be done. We're not sure. Yeah. We have to wait and see. So they're certainly not ruling out one more, and most people think we do get one more out of them.
Okay, let's talk about the story, as I found this quite interesting. You know, that younger Canadians feel like they have a lower quality of life, and because of that, they are less likely to have children. Let's talk about the impact that could have.
Yeah, this is a kind of a sad outcome of the sort of compounded impact of post-pandemic issues around economic instability, affordability, problems with mental health, and then all of the disruptions that happen in kind of work and home life. And that's all added up to Canadians who are 15 to 29 have a lower overall quality of life. This is from StatsCan. And it is making them apparently less likely to have children, which is that's one of those kind of long-term trends that we see in retrospect, right? That, you know, the baby boom happened after a war. Like you could kind of see in retrospect why people behave the way they did. We might be seeing this in real time, that all of this compounded effect on young people will keep them from having families, which is a kind of an astonishing thing to see in real time. And maybe it'll change. Hopefully the economy improves, their situation and their overall quality of life gets better. But to me, it is a bit of a sad thing when we can see that happening, people making that choice.
You know, when you hear scenarios like this play out, I think back a generation or a couple of generations ago when these things are cyclical, right? Economies are good, economies are bad, we come out of it. People look at this now and it's hard to see a way out and when that way out is happening. I mean, if you had to look at this in that sense, Are we in this for 3 years, 5 years, 10 years? What would be your best guess?
Well, what I will say is that cycles, as you say, do cycle. It's just a hard truth. So will there be a recession? You can say with 100% certainty there will, because there's just no situation where one doesn't come at some point. The question I guess you're asking that's important is how long? What does this cycle look like? And I'm still in the camp that says, we do have an overvaluation, for instance, in housing. That's one of the factors young people cited in not starting a family in the next 3 years. They can't afford a house. And that's fair, right? That's a totally legitimate decision to make. I think that will correct itself, not just because we'll bring on new supply, but I think there's been an overshoot on values here, and the writing will be on the wall that we're going to have to stop treating our houses this way, and the market will just adjust. So to me, this is an outlier period, and my hope is that if young people can get through it, there will be a daylight. Is it 3 years? Is it 5 years? I don't know. I couldn't call the timing on it, but I would say there's probably another side to this particular cycle.
Wouldn't that take wages to also have to continue to go up, though, so that people are earning enough to actually be able to afford a house, even if the price of homes do come down?
Or, that's one way to look at it. The other way to look at it is we need a bad enough recession to correct everything, which is one possibility. Recessions can be difficult, but they do have a way of taking the froth out of markets that have a lot of froth. So a big dose of recessionary time in Canada might just correct the housing market back to an affordable place. So, if you want a silver lining on that, there are young people who might actually benefit from that kind of correction.
Of course, then everybody else will complain that all these properties they bought as investment properties, thinking they would never stop going up. When that happens, now they're going to be in trouble. But that happens
People
all the time.
People need to be careful.
Yeah.
Yep.
Okay.
Yeah.
Let me ask you one last thing. We talked about the UAW strike in the U.S., which is still, of course, ongoing now. But Unifor, at least in this country, managed to get a deal together with Ford, which is obviously good news. No one wants to see a strike like that. But your note here suggests that, of course, now, by virtue of that, there are probably significant wage gains in this deal, and there will be in others that have to be negotiated and still are being negotiated. And to go back to what you were talking about earlier about the Bank of Canada wanting to see exactly the opposite, you're wondering what this will do.
Yes. I do think that we are seeing the demands are huge, and we know that from what the UAW was asking for in the States, right? A massive wage increase is above 20%. So we know that significant wage gains are likely part of this deal. The stuff that's also super interesting will be what kind of protections are being asked for and given on job protection around electric vehicles, new technologies that require fewer workers, and whether or not the unions can actually keep the jobs as we move into this kind of new era that requires less labor. That's the stuff that people are watching really closely. The wage thing, there is a bit of kind of catch up to play. If they get concessions on things like pensions and other benefits, that's a big deal because that's a reversal of a long trend in the other direction. But I'm going to be watching for protections that they ask for. And sometimes companies offer up protections because it works for them in the short term. And the auto companies are a huge example of this. And longer term, they wish they hadn't done that. If you think of the job banks that they created years ago that ended up being just a disaster. So it's going to be interesting to see the contents of this.
Amanda, I want to thank you so much. Appreciate your time as always.
Great to talk.